Okay, so we do hear at the end of each year, people are coming, oh, you need to spend this or do this, and do some end-of-year tax planning. What are some key decisions that a business owner can make at the end of a tax year to help them with their tax bill for the end of the year?
Well, again, one of the things that we try to communicate and advise during the year is what's the corporation doing, or what's that entity doing that's creating income, how much income is going to be there, and what are some of the rules that we may be able to take advantage of. And in planning for the year end, one of the things that I try to advise our clients about is not just spending money for the sake of spending money.
Right, because you hear that, oh yeah, I'm going to do that because then that'll be a great tax deduction. Well, if you spend $3,000 to save $500, may not be the best thing.
It may not be the best thing to do as far as your cash flow is concerned.
Right.
And one of the typical things we see, and at times it does make sense, is to make a large purchase towards the end of the year. And again, some of this depends on whether you're a cash basis or an accrual basis income tax filer.
Explain that, cash or accrual.
Real simple.
Use some big terms.
Real simple. The differentiation between an accrual basis taxpayer and a cash basis taxpayer is a cash basis taxpayer, money in, money out, it's income and it's expense. So you either count it as income or you deduct it as an expense as you write the check, or you put the money in the bank or receive that money from your clients. On accrual basis, we have to count receivables. So if you sell something towards the end of the year, you haven't collected on that money, that sits in your accounts receivable, or if you have items that you haven't paid for towards the end of the year, you may have gotten that bill from AT&T, but you haven't written the check yet.
Right.
That goes in as an expense, even though the cash hasn't changed hands. So that's really cash versus accrual in a nutshell. So you have to be careful with that aspect of planning as you think about it. So that would be the quick differences, if that helps.
Right, so just the fact of how your accounting system and your taxes are set up as cash or accrual can have an impact on that tax, because if you're an accrual, just because you owe somebody, or if you're cash, just because you owe somebody money doesn't necessarily you can make that as a tax, liability that year.
Right.
So that aspect of just tax planning is probably pretty important.
Yeah, that's one of the first things that we'll look at.
Yeah.
Obviously, when we look at a new business or a client who's coming into our office for the first time, we flip open the tax return, look on the top page, and make sure that we know if it's cash or accrual-based business. That goes into, that's the first thing we have to do in planning.
Now, is that something I can just kind of flip a switch and I'm like, well, this year I'm cash and I can do this and that'll help me save money, but next year I'm going to be accrual, so
no, unfortunately not.
No?
That's something that we've got to ask the IRS for, and we can make that decision to do that. There's a user's fee involved. The IRS wants to get their cut one way or the other. And then depending upon the entity structure, there can be some pretty severe tax consequences on making that switch. So it's something you have to be very, very careful with.
Right.
So once somebody makes that election, the assumption is that they're going to stay with that unless situations and circumstances dictate otherwise, or there are some special rules inside the IRS that is, if you reach a certain income number, they want you to switch. They're going to force you to do that.
Okay.
But those are for most of our clients, those are fairly lofty numbers.
Okay. So we talked about kind of the purchases. Is there any kind of other things that people can decide to do or not do for end of year tax
decisions?
Well,
we kind of touched a little bit on whether or not you should make a big item purchase towards the end of the year. I think of some of our landscaping clients who are not doing a tremendous amount of work right now. The grass isn't growing.
Right.
Things have kind of gone dormant, but everything's on sale.
Yes. Okay.
It's real cheap to buy a lawnmower right now, or a big tractor or something like that, because they're just not being used and people are trying to clear out inventory. So that often comes up in conversation. Should I go ahead and make that $25,000, $30,000 purchase?
Right.
I might need it next summer anyway. Should I accelerate that deduction? And sometimes that does make sense. Again, we want to make sure that we're not strapping the company for cash if that's going to be an issue. But I'm going to make the assumption that because we're a cash basis taxpayer, we've got some money in the bank.
Right.
I need to do something with that to drive down the income tax. And making that big purchase may make sense.
Yeah, so if you're going to make the purchase anyhow, you might as well make it then.
Yeah, it might make sense to accelerate that.
Right. What do you do, so you kind of look at this year, next year, and you try to predict a little bit. So how do you approach the decisions as far as, well, it's better for me to make this decision this year and take this tax savings this year versus next year? What's kind of the general philosophy? When should I take my tax savings? Should I take them now, or should I, maybe say, hey, they might be bigger, or I might be able to do more with them, or I'll need them more next year?
Well, it's a complicated question.
I know.
You didn't leave me with the easy ones, did you? What we try to do in our firm is just be very interactive with our clientele.
Okay.
Just to kind of get an idea of what their expectations are. And we're on the verge of 2013. The world didn't end today, or at least not yet.
That's right.
So we're going to try and continue to plan.
Okay.
So we're on the verge of 2013. What is that going to look like? And I know maybe we'll address some of this later in the program about what Congress and the government's going to do with tax legislation. But what we're trying to do is communicate with our clientele up front to figure out what their expectation is going to be for the coming year. Do they have some big contracts on the table? If they're government contractors, are there things in the pipeline that may dictate putting some of those expenses off?
Right.
Or was this an anomaly type of year?
Yeah.
Something really big hit, and we need to take advantage of the tax savings while we can.
Okay.
And those are things that we try to communicate with our clientele throughout the year. You and I have talked about this on a number of different occasions, even off camera, about your accounting books and how to read financial statements and use those kind of tools so that the business owner gets an opportunity before I even pick up the financial statements to really have a pulse of the business and what's going on.
Right, and that's actually, of course, I'm glad you brought that up. That's one of the things that we do at Sigma Business and Be Better Business TV is to help people be better business owners and be better at business. So when they're coming in and having a conversation with their accountant, it's not just throwing a bunch of paperwork at you and saying, here, what should I do? They're thinking through a little bit long term, and they have that thought process because they know you're going to ask and they want to have answers, and that's going to help them really get the value from an accountant, right?
Right, it does. And some of our best clientele are the ones who are really informed. They're the ones that they're reading their financial statements on a regular basis. They're active in not only trying to figure out what their tax savings ought to be or how to take advantage of tax laws, but really forward thinking in how they're going to grow their business and how does that play in with the tax laws. And those are the good conversations.
Yeah.
Those are the fun ones. Those are not the ones where I get a shoebox at the end of the day trying to figure out which receipt goes with what.
Yeah, because that's, you're just not getting your value from that either.
Right.
As well. So once again, we are live here on Be Better at Business TV. So Alyssa, do we have any questions?
My business friends talk about Section 179. What is that and how can I use it?
Yeah, so Section 179, I actually just heard recently that there might be cuts in the 179, which I know is an important thing for business especially. What is Section 179 and why is it important?
Well, 179 is a law that was enacted years and years ago that allows small businesses and large businesses to a certain extent to deduct the full purchase price of a large purchase up front rather than the normal rules which force us to take a depreciation method of some sort over a length of time, typically 5 to 7 years on business equipment.
Okay, so if I went out and I bought that lawnmower,
right? Perfect
under
example.
normal accounting principles, I would say, okay, that was $25,000. We expect this to last for 5 years, so that's $5,000 a year. Taking that as
I like the way you did the easy math.
I did. I used whatever that system is. So anyhow, so it's accounting wise, because that kind of realistically says what you're spending as far as how that equipment is depreciating or what you can sell it for.
Right. So Section 179 allows us to take that full purchase price up front.
Okay.
So I can write that entire $25,000 off the day I sign the contract for that piece of equipment. And it may be that I paid cash for it.
Right.
Or it may be that I went ahead and financed it with some financing company. I'm allowed to take that deduction up front. That's the essence of 179.
Okay. So if you have, a good year, the 179 allows you to take, and it really promotes investment back into your company, investment in equipment from that perspective.
Yeah, and I think that's what the IRS and the government was trying to do, was stimulate. We went through this, I want to say about 10 years ago, when the IRS loosened up the rules a little bit on 179, went from a $25,000 a year cap up to $200,000, and that grew even from there. People were running out and buying all kind of things and buying them in bulk, and that did stimulate the economy for a little bit, and I think that was the purpose. That's what they were trying to do, give a tax break to small business owners, stimulate the economy a little bit, and reinvest,
Okay.
not only in the economy but also in their own business.
Great. And I think a 179 is also one of the big things that makes end-of-year tax planning, because you can make those decisions, and it kind of helps that.
Right.
Good. Okay, great. Well, hey, we've talked a lot about taxes, but why don't you just take a minute and tell us about Badger Sumrall and Company?
Badger Sumrall and Company is a full-service accounting firm. We have offices in Marshall, Virginia, and also in Vienna. My partner, Dick Badger, manages our practice in Vienna, and I manage the practice in Marshall. We provide soup to nuts of tax planning, tax returns for small, medium-sized businesses as well as individuals. We do audit work, financial planning, and consulting as well.
Great. And I've always loved talking to you, because it's not just about the accounting and taxes. You take in, you think about the marketing and the operations and things like that. So I've enjoyed working with you on that.
Yeah, it's been fun. It's been very good. Thank you.
Great. Well, Shawn, thanks for joining us, and thank you for joining us here on Be Better at Business TV. I'm the host, Jamie Gorman, and I own Sigma Business Management, and we help businesses be better at business. We do that through planning, through education, and through meeting facilitation. Thanks again for joining us, and please share this with somebody if you found it helpful.
Thank you, Jamie. I appreciate you letting me be here.
You're welcome. Great.